Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, September 8th, 2023. I am Frank Ochoa, aka PivotBoss. Real quickly, again, going back to our pivotboss.com/events page here, going down to Premium Bootcamp here. We are now on our last day, day 4. The outside reversal here, we have finished the last 3 signals here, and these have been incredible sessions here, tremendous sessions. If you have not been a part of these sessions, you can still be a part of what we're doing here by coming up here and joining here today. And again, use this coupon here. You get 1 free month and jump into these sessions with us. These are already recorded and posted for our members. Tremendous education here for any trader looking to engage the market in multiple time frames. Now, today, 11 o'clock, we'll get to the next one, outside reversal. That'll be later today. All right, let's take a look here at the charts. Now, you'll see right now, inside day here at the moment, a little bit of a downward bearish bias for the day, 51% of average range heading into the RTH session. Today is a day that lacks front end or even high-end economic data points here, so it could be a relatively range-bound day within the boundaries of the previous session's range. So it could be a fade the edges with a downward bias. Any new lows here could be, as these things continue to work their way out of the narrow day ranges here, we could be looking at continuing downward. Again, from the breakdown high, we're looking at a range somewhere between 43.63 and 43.83 from a full range perspective, but failing at the previous month's midpoint would tend to open up the previous month's low as well. That's around 43.50, so plenty of downside that could be ahead. And even if price were to rally or pull back early next week, that could offer an opportunity to trap and reverse for a continuation down until proven otherwise. All right, taking a look here at the NQ. Right now, downward trending price action for the day as well. Selling off during the London Open here and price pushing down early on. You see this midpoint right there. That's the previous session's mid. Price closed right at or around it. Still lower highs and lower lows day over day. So again, we could be looking at a continuation toward the lower end of the range. Again, yesterday's range could keep prices mostly in check for today. Maybe we poke to a new low at some point here later in the session, but not anticipating a full-on failure and breakdown of any significant magnitude, especially on a Friday here of a holiday shortened week. So we could continue to have that bearish bias, obviously, heading into the rest of the session. And again, early next week, any pullback could be seen as a continuation lower as we drop back within this trading range here. Keep an eye on the previous month's midpoint. That's going to be significant. Failing to hold that by the end of the day, as we currently are now, would suggest a continuation toward the previous month's low. 14,600 would be that level. All right, let's take a look here at crude oil. Crude right now higher by about 2/3 of 1%. Narrow range over the last 4 sessions. Double inside day. Double inside day here. Yesterday's high, or the previous session's high 2 days ago, was above by about 2 pennies here. But for the most part, sideways price action. That's something we mentioned earlier this week. This day right here was kind of a reset day that gave us a strong high, gave us a strong low, and was wide enough in all likelihood to keep prices contained into Friday. And it looks like that's going to be pretty much the case here as this market remains very tightly coiled. It is building energy, so anytime you have a 4-day narrow range like this, that could become a 5-day narrow range or even beyond. That right there is building energy for the next big move. And the fact that we're holding up here after this big push through 84 and 85 could be a buildup of energy for a continuation to come. The 8-period average rising very, very swiftly here. If we get a failed breakdown early next week, that could be a rejection opportunity for a continuation to the upside as this thing looks to push toward the next upside market structure level of 94. All right, let's take a look. Well, before we get to the next one here, let's actually quantify this real quickly here. If we bring up the 4-day narrow range just as it is, so if today finished the day like this, then we have a 4-day narrow range of 64% of average, and we'd be looking at a move of about 4.5 to 6 points of range. So 5 to 6 points of range up ahead. If price were to break down hard and reject, we could be looking at a bounce off this level that takes us 5 points higher. That'd be 90, 6 points higher at 91. That could be the next continuation target to the upside. So again, where does the low get us? And then how many days of compression do we get? Is it going to turn into 5 or 6 days? But still looking quite good. The pullback could be a great buying opportunity ahead. All right, let's take a look here at gold futures. Gold right now working on a potential outside day down. We have a very, very clear digestive day that developed in the previous session. Super narrow day, compression throughout the session, pinching of the bands on an intraday basis, a classic digestive day. You can see right here how tiny that day's range was, and the fact that we have a narrow range like that increases the potential for an outside day today, and perhaps an outside day that could be a low range outside day, which means we take out the high, fail at the high, which we're currently seeing right now, and then rotating back to the low for a new low, and then perhaps closing within a 2 or 3 day narrow range. So we could be looking at further weakness ahead. These highs up here, strong double top highs at weekly VWAP. So those could be in for the day. Keep an eye on this previous session's high, failure at 1948, opens up a return to the opposite side of the range, 1940, and perhaps a brief outside day down. So keep that in mind. Once it does get to that area, we could bounce and just stay flat within this range. Still downward trending. The fact that we've given up the previous month's mid opens up a continuation toward this previous month's low. That's about 1914 below. All right, lastly, taking a look at the YM. The YM here failed new high as well, also a digestive day. It's the same idea as gold here. Yesterday, inside day, very narrow range. You can see the compression here. So far today, already a rejection in overnight trading. It happened right at the London Open. Higher high failure, very aggressive, and then pushed back below the previous session's high. Lower high at that level as well, and already back to the previous session's mid. Look for this thing to continue downward toward an outside day down, maybe 34,340, somewhere in that area. And once that happens again, perhaps we bounce back up, you know, as low as 300, and then we bounce back up and just kind of finish inside a narrow 2-day range heading into the weekend. So right now looking fairly bearish here with a shot at going outside day down, even if it's briefly. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well. Happy Friday. Please be sure to like, share, and subscribe. And if you're not a part of our premium boot camp here, you can still jump in, watch the videos, and play along. Everyone have a fantastic rest of your day, and I'll see you in the trading room. Take care.